extracts from Plastic's consolidated statement of profit or loss for the year ended 30th September 2004 for revenue, cost of sales, finance cost. These three things they've asked and they've given 5 months. Okay? And they asked to prepare the consolidated financial position. So emphasis is given for SOFP, but you are asked to prepare SOPL, few items, the core items like revenue and cost of sales also. So you will be getting an overview like if everything is asked, how will you prepare the working notes? See, from SJC point of view, since the question paper, we may get 15 marks only, maximum marks. So either it will be SOPL or SOFP. Okay. If it is only SOPL and it is a small problem, means you may get one more sub question also. If it is SOFP and it's a very small problem without much adjustment, then also you may get one extra questions. So together, profit and loss and SOFP, as of now, I could not find anything. It was all of 20 marks. I cannot ask for a 15 marks. So the setter, paper setter also will consider that. Okay. So, but you focus on both because since we don't have a blueprint, we have no clue like what type of questions will be coming. So let me go ahead with workings. Okay, like as usual, we'll just see what type of problem is this. So if you see on 1st Jan 2004, Plastic acquired 80% of equity share capital of Subtract. So P and S. So the acquisition is 80%. And the consideration was satisfied by a share exchange of 2 shares in Plastic for every 3 shares acquired in Subtract. At the date of acquisition, shares in Plastic and Subtract had a market value. Both the market values were also given. Plastic will also pay cash consideration of 27.5 cents, that is 0.275 on 1st Jan 2005. Remember, the acquisition is happening. So, few points I will suggest you to highlight always. See, the acquisition is happening on 1st Jan 2004 and it is 80% acquisition. And consideration, the purchase consideration was satisfied by a share exchange as well as here it is given pay cash also. Cash consideration is also given. But if you see the cash consideration is not happening immediately, exactly after 1 year it is happening. So there is a deferred cost incurred in it, right? Deferred payment. There is a part of deferred consideration here. Okay. And Plastic has a cost of capital of 10% per annum. Of course, if there is a deferred consideration or a significant factor, so you'll be a significant financial component, no, that one is there. So 10% per annum is the cost of capital given. None of the consideration has been recorded by Plastic. So the considerations were not yet recorded, means to say what they are giving a hint, share premium is not there, share capital is not included, nothing is included. So you are going to do this problem. So here if you see SOPL is given, SOPL and OCI for the year ended, it's given here. Revenue, cost of sales, finance cost is given. Let us go down. And we have few adjustments also. So now we are asked to prepare SOFP and SOPL few items. So let us always start whenever you are doing the problem, the first working for consolidated financial statement, whatever be the type of problem, will be what? What will be the first working?
Group structure.
Group retained earnings.
Retained earnings are.
Sorry, group structure. Group structure.
Group structure. What voice I hear it, but very, very soft. Okay, group structure is the first thing. Okay, who is acquiring who? Plastic is acquiring. So, Plastic. Yes. Percent of tracks equipment. On 1st Jan, this is a mid-year acquisition. I don't know whether you people noticed or not. See, listen here. The financial year end is 30th September 2004. So what is the beginning of the year? Fast. September 2004 is ending. What is the beginning?
1st October.
1st October. Okay. Is that Hashi? Someone
Yes.
speaking? Yeah. Please be louder. No? Your answers are correct. So the acquisition is happening when? On 1st Jan. Right. So this is happening at the mid. Mid means like in between the year. So what is the pre and post? Pre is not bothered. What is the post acquisition period? How many months?
9 months.
9 months. Wow, very clear voice. Who's this?
Diksha, ma'am.
Wow, at last someone is at last. Okay. So 3 months and 9 months. Fine. So we got this information. So W1 group structure done. This is more than enough. Number 2, so keep it in mind, predominantly we are going to solve SOFP. So what will be the second working of SOFP? Working note 2, standard 5 workings we have. No? What is working note 2?
Net assets of subsidiary.
Very good. So net assets. That also. I'm writing because later you'll be having associate also. That time there should not be a problem. That's the reason I'm writing here very, very clearly. Okay, so remember all, I'm taking out 3 zeros here. Problem it's taken, so I'm taking it out. Net asset, which part I should see? You're fast, we can finish this problem in this hour. You're slow, can't think. Next time.
Equity and liability of subtract.
Liability will you take? Or
Not liability, only equity, sorry.
only equity. Equity and retained earnings. That is 9,000 and 3,500. So
Yes.
this 9,000 and 3,500. So I have 3 columns here, right? So what are the columns I have here? Considering net asset.
At acquisition, reporting date, and post acquisition.
Who's this? Getting new voices.
Adriel, ma'am.
Adriel, what happened to your voice?
I don't know. Maybe the mic, ma'am. Mic is.
And moreover,
Not-
you're fast today, maybe. I got confused. At acquisition, reporting date, because at the stretch you're answering, no? Normally that you think an answer. That's what very good.
Been studying, ma'am.
So at acquisition, reporting date, and post acquisition. The first one is equity, share, capital. So whatever is given there, you write it. They are not very specific, like what term you're typing. First, I'm going to fill my reporting date only. This is my way. I'm doing like this. Your option is open. Okay. I'm going to fill always the reporting date, which is very easy. I'll pick what is there in the financial statement.
9,000.
Yeah, 9,000 and 3,500. I'll write only this. Okay. 3,500 is my retained earnings. Later, I decide where I should fill what. Okay. Done. About retained earnings, some information must be there to split accordingly. You can't tell, okay, 3,500, no, 9 months is post acquisition, remaining pre acquisition. No, retained earnings will have accumulated profit also. We can't think like that. So let's see here, some information must be there. If you go through here, last para, normally it is given in the last or at the beginning. Okay, see here, assume except where indicated otherwise that all items of income and expenditure accrue evenly throughout the year. Okay. Subtracts profit, that is the subsidiary's profit for the year ended is 2 million. That is current year reporting time profit is 2 million. Means why it is 3,500? What is that 1,500?
So, ma'am, it's the reporting figure, whereas 3 million is the
3
post acquisition.
I didn't get you. I didn't get you. Why 3 million is coming here? It is 3,500. You keep it as such. Don't put 3 at all in between. 3,500 is there. In that 2,000 is the current year profit. That's what they are telling. Current year profit is 2,000. Yes. Because your retained earnings have current year's profit plus already reported profit also. So at the time of acquisition, how much it is there? How much you can take it? Initially, what I thought I'll tell you here, I think this should be given as subtracts profit at the time of acquisition is 2 million. They should have given like that. This is my doubts. So I will check this particular part once with the tutor and get back to you. This part alone. Whether it is a current year profit, because it's mentioned subtracts profit for the year ended 30th September 2004. If you see your financial statement preparation, it is 30th September 2004. Year ended profit is 2000, but in the reporting date, it is mentioned as 3,500. How much is the post acquisition and how much is the at acquisition? Okay, it's not, it is actually, it is in the book. They have taken as 2000 here and they've taken it's equal to 3,500 minus 2,500 here. But I somehow differ in this 2,000. 2,000, it's not specific whether at the time of acquisition or if it is year end profit means I have a doubt here, this part. Okay, so this part I need to check with the tutor once again. Once I'll check and get back to you. Yeah, whether it is at the time of acquisition or something else. If it is at the time of there is year end profit, then means to say 1,500 because it is reported in 30th September. It should be pre-acquisition, no? But it is given in Ulta in the example. Okay, with the provided information, if I take means 2,000 is the current year profit means I should take 1,500 here and 2,000 post acquisition or some adjustment need to be done. At least the number of months, something need to be done. But that is not given here. This 2,000 part, I'll check and get back to you. Okay, just proceed with the remaining meanwhile for time being. So normally what else we'll see for net asset, that is the liability side, not liability side, equity. In the retained earnings, what else will be there? The current year items. Let us see the adjustments one after the other. The first adjustment speaks that at the acquisition date of acquisition, the fair values of subtracts assets and liabilities were equal to the carrying amount with exception of subtracts, that is subsidiaries property, which had a fair value of 4 million above its carrying amount. So there is one asset, the fair value revaluation. Yeah. What do we have to do this 4 million?
Ma'am, we have to take it in working 2, ma'am.
Working 2, we have to take it. That is a
Oh,
net asset working.
4,000.
We'll be taking property fair value. At the date of acquisition, they mentioned. So at the date of acquisition, I'll put 4,000 and at the reporting date also, I'll put the 4,000. For consolidation purpose, this led to an increase in depreciation charge in cost of sales. What do you mean by this? What do you mean by this? Depreciation charges in cost of sale. What do you mean by this? Can you understand this? What they try to tell? Depreciation in cost of sales.
Excess depreciation, ma'am.
Cost of depreciation is charged to cost of sale. That is the understanding here. Okay. For consolidation purpose, this 4 million led to an increase in depreciation. There is a depreciation increase of 100,000 in the post-acquisition period to 30th September 2004. Subtract has not incorporated the fair value property increase to its entity's financial statement. No incorporation has been done. This 4 million included means no problem, but it is not included. So this fair value normally we'll take it here. This is property. So I can write it as fair value of property. Okay. And they said it is when it happened, this 4,000. Am I audible now? Hello? Hello?
Yes, ma'am. Audible, ma'am.
So see here, the subtracts property had a fair value of 4 million and this has not been incorporated. So 4 million we have to take it down. And where I should take at the time of acquisition, they said, so I'll be taking here. So in the, but we will not take this in the post acquisition period because it has happened at the time of acquisition. So in these two places it will appear. And they said there is an increase in depreciation because of this 4 million taken at the time of acquisition. There is an increase in depreciation of 100. So $100,000. So depreciation, it's an expense. We are not reversing, keep it in mind, it is adding on. So depreciation, I can otherwise write it as fair value of depreciation. Fair value depreciation. Okay, fair value depreciation, they've given $100,000. That's 100. And the same will appear here. Don't put it at the time of acquisition because at the time of acquisition only you are revaluing. And after that, till the date, the reporting period, you got to know it is 100 is the depreciation. So it should be subtracted at the reporting date as well as post acquisition, not at the time of acquisition. At the time of buying an asset, you will not charge depreciation. Only after usage only you will charge. Okay, you should remember that. Okay, then what else? Anything else is there related to revaluation or something? So we have one more paragraph given below. The policy of Plastic Group is to revalue all properties to fair value at year end. So now it's about the parent. Okay, so subsidiary story is over. Now parent story. On 30th September 2004, the increase in plastics property has already been recorded. However, a further increase of 600,000 in the value of Subtracts property since its value at acquisition has not been recorded. See, if there is an increase in the value of plastics, that is the parent's asset, we will not consider here because we are taking only net asset of the subsidiary. But here it's given, this is the policy of parents group to revalue all the assets. And the plastics property had any revaluation increase have been already recorded in the financial statement. But value of Subtracts property since its acquisition, because after acquiring also every year we'll be revaluing the asset now, that has not been recorded, it seems. And it is 600,000. So these two adjustments are there related to increase in the value of asset. That is increase of $600,000 in the value of Subtracts property has not been recorded. So you record now. It is an increase in the value of the asset. So you're going to record it. So I can write here because this is my retained earnings part, right? It is revaluation of property. So this is happening when it's happening. It is happening at the year end. Year end means your reporting date, and it is a $600,000 increase. So it will have an effect in your post acquisition also. Hope you are following. The concept is highly conceptual. You have to follow that. No other option. So all these items will have an effect on my retained earnings, right? Fair value of property increase or depreciation will affect the net profit. So obviously it will affect the retained earnings. Revaluation of property will come in other comprehensive income and it will be added to retained earnings or revaluation surplus wherever. So altogether I'm having so much. This is the amount. So I have to write is equal to sum of okay. Net asset value at the time of acquisition at reporting period and all the information given so far. Now, what is the working note 3? Note 3, what is it?
In goodwill.
Suddenly I got it out. Okay. So For goodwill, normally we take how much is the investment made. So investment made, we normally check in the investment part here. But if you see the investment, it is 10% of loan. And if it is only cash means you can check here. But see here what and all is done here. Share exchange is happening and some cash consideration is happening after a year, all such things, right? So we are preparing this on 30th September 2004, but the payment is happening on 1st Jan 2005. That is the deferred cash consideration. So let us see what and all the investment made by the parent first in the subsidiary and how much is the investment made by NCI in the subsidiary. And then we'll see whether we bought it as a goodwill or as a negative goodwill. So far, I've never come across a problem with negative goodwill. Okay, so we'll take it here. This one is equity share. Read carefully. It is given. Plastic acquired 80% of equity share capital of Subtract, and the purchase consideration is exchange 2 shares. Okay, the share exchange of 2 shares of Plastic for every 3 shares in Subtract. That is, who is issuing here? Who will issue when there is a purchase consideration?
Parent.
Yes, parent is issuing. On what proportion they are issuing?
2 by 3.
shares, 2, 3, correct. For every 3 shares, 2 shares are given. Okay, that so you have to take whose market value, 3 or 2.5. 3 is for parent and 2.5 is Subtracts.
3, ma'am.
3 only we should take. Very good. So let's see how many number of shares. It's very peaceful. If it is $1 means no need to compute at all. So equity share is $1 and Subtract has 9,000 equity shares. Okay, let me write here. So it is 9,000. 2 by 3, right? In that, how much I'm holding? That is, I means parent is holding 80% into 2 by 3. For every 3 shares, 2 shares are issued. Into how many? What is the rupee? Dollar into $3. Am I right? So into $3. Into 80% into 2 by 3 will give me the number of shares. Into 3, if I multiply, what is the value of the share I'll be getting? Okay, so number of shares will be, this is number of share. I'll just write here, okay. Or else what at the time required we do. So this is equal to in by 14,400. I think we follow. You could understand this part. Not stop. Okay,
Yes, ma'am.
14,400. Yeah, the value of equity share, not the number. Okay, I'll just write here the number of equity shares. I need to write within this box and understand it. How much you're getting? So you'll be getting 3 into 3 only we multiply. No, so it's equal to 1400 divided by 10. So 4,800 is the number of shares. If you do this, you'll get 4,800. This is the number of shares. This may be useful later. Okay, so this is regarding the equity shares. Now coming to, they didn't pay only equity shares. Cash consideration is also paid, but it is not paid immediately. So if it's not paid immediately, we'll call it as deferred consideration. It is paid after 1 year. Acquisition is happening on 1st Jan and the payment is happening on 1st Jan 2005. Your reporting date is coming in between, that is 30th September. How this amount is computed. Now read the cash consideration part. Plastic will also, the 4th line, you read it. Plastic will also pay cash consideration of 27.5 cents on 1st January 2005 for each acquired share in Subtract. How many shares acquired? How many shares acquired?
4,800.
Very good. So 4,800 into 4,800 shares acquired. For
Ma'am, the share
4,800
exchange.
shares issued. Yeah, how much is acquired?
7,200.
Very good. 90,000. Even I did the same mistake. I scratched here. Okay, 9,000. Sorry, it's 9,000. 9,000 into 80%. Okay, this is the number of shares acquired. In cents. Cents means don't put 27.5. You have to write 0.275. In more. What is it? Very, very important. What is it? 27.5. You're not paying immediately. When you're paying? Are you paying today? Or on 1st Jan 2004? Are you paying that day?
Divided by 0.1. 1.1.
Exactly. Divided by 1.1. So into 1 divided by 1.1. The whole bar n don't want. So 1 divided by 1. Or else divided by 1.1 is also perfectly fine. I'll do that. If you people are comfortable, I'll do that. Okay. Let's see here. That is deferred consideration is equal to 9,000 into 0.275 divided by 1.1. So 1,800 is the deferred consideration. I think you're following. Okay. So
Yes,
this
ma'am.
is done. Very good. Thank you. This is done. Now, what is the last one? One more is there. No, this is regarding the parent. This part is parent's investment. Right? Please investment. This is for your understanding. Don't write like this. Okay. Now, one more person have invested. Who's that?
NCI.
NCI. We have to go down here and see how much is NCI invested. Fifth point is mentioned. Plastics policy to value the NCI at fair value at the date of acquisition, but they didn't give how much is a fair value. Instead, it is mentioned for this purpose, subtracts share price at that date can be deemed to be representative of the fair value of shares held by NCI. So they didn't give the fair value, but instead they are telling subtracts, that is the subsidiary's share price can be considered. Share price of subsidiary is how much? It is 2.5. It is given here, no? 2.5. Now tell me, what is NCI's investment? Hmm.
9,000 into 20% into 2.5.
4,500.
2.5. Very good. 4,500. One more person gave the answer also. Very good. Set into 20%. 4,500 done. So up to here, what is this? We actually, this is the total investment made in the subsidiary. So we see contributed 4,500 and the parent contributed 1,800 plus 14,400. Total investment made. But what is the fair value of net asset? So less value of net asset at acquisition. Is happening of the acquisition. How much it is?
6,000.
Say I did here. See, I didn't take 9,000. Yeah, now tell me how much it is?
15,000.
15,000. So 20,700 minus 15,000. What happened? 15,000 worth of company, you paid more. How much you paid more? So the sum of this two. 5,100 you paid more. What is it then? What we call this as? This will be within the
Goodwill.
ones. Yeah. On acquisition or like there is no penalty. Okay.
Ma'am, is there impairment, ma'am?
They didn't give anything. They didn't give as such. See, these 2 points we have already read and this paragraph is over. If you see the remaining, I could not make out anything. One is trade payable receivable. One is, again, it's related to the inventory only. And again, one is loan note. You don't have any impairment. Okay, I should have read for you because morning Monday I solved this problem. So you don't have impairment in this. If it is there, okay. So working note 4. What is working note 4 first?
NCI.
NCI, very good. Okay, so NCI.
Ma'am, NCI at acquisition date, ma'am.
That's right. No, I'm not writing this one. NCI. Okay. Now tell me NCI at acquisition.
4,500.
Very 1,500, which we have taken here. That is, you can take it from your working note 3. You can mention here. What else belongs to NCI here?
Post
Share on the
acquisition of
post.
net assets.
Yes. So NCI's share or in. No, that is better, I guess. So it's equal to, how will you compute? I'll just show it. Position profit, you know it is 2,000. So 2,000 into what is NCI is a share, that alone we have to find. That is 20%. So here this is equal to 1,000 into 20. This NCI share. Apart from that, we don't have anything. No impairment loss. No. So if any goodwill impairment is there, that we will be deducting here. Apart from that, that's it. 4,900 is NCI share. Okay, this is NCI. Done over. What is the last one? Last adjustment in general. Apart from that, we may have something else. God. Workings. What is the fifth working? Very important. Working.
Group retained earnings.
Very good. Okay, when coming to group retained earnings, this is prepared by the parent, remember, in mind. So who's retained earning first? I should take
Parents 100% retained earnings.
plastics. First. Okay, how much is plastics retained earning? It is 6,300. Remember, it's given here. Okay, this value 6,300. After this, what else I should do? And for plastic, NCI is post acquisition share and all taken already. Now plastics, what?
Post acquisition share.
Yeah,
1,600.
plastics share in post acquisition. So that is in subtracts post acquisition reserve. It's 2,000. So 2,000. One more thing here, listen. Here, this increase of 600 in the value of subtracts property. This part. Read this once again, because in the book it is differently treated. I'm doing here differently, I'll tell you. So the policy of plastics group is to revalue all properties. This part you read carefully. At the end, each year end, on 30th September 2004, the increase in plastics property has already been recorded. However, a further increase of 600,000 in the value of subtracts property since its acquisition has not been recorded. Plastics property increases already recorded, but subtracts property is not recorded. So this 600 is subtracts property. Will you record in group retained earnings here?
No, ma'am.
Because already post acquisition it is included. Will you record? Will you record it here in group retained earnings of plastic share? So that 600 should be removed. Okay, so it is 2000 minus for NCI you have to include it. And while recording for plastic, they are telling it is already recorded in plastics book. Only what is it? Subsidiaries 600 you should always remove here while considering the post acquisition reserve. So 2000 minus 600. Okay, so 1120. Then apart from that, normally we'll take these two. And apart from that, can you remember something else will affect here? What is that? I'll tell you. This deferred consideration is like later payment, no? Like your dismantling cost, what you have in your
Ma'am, unwinding, ma'am. Finance
Exactly.
cost.
Unwinding cost, that is the finance cost will be there, no? Finance cost, I should actually remove it. The finance cost I should remove here. Okay, I will write it as unwinding because several times I've explained about unwinding. Out on or funds. You see, deferred consideration we saw already it is 1800. At the finance cost, capital cost of capital is 10%, no? So your finance cost is also 10%. In this, just a minute. How I get it? Okay, this 1800. When actually I considered here, I'm going to pay on 1st Jan, but this financial statement is prepared on which date? Okay, otherwise I can ask you. This consideration, everything, I will record from as on 1st Jan 2004, right? 1st Jan 2004, the acquisition is happening, no? At the time itself, you will consider deferred cash consideration, like revenue. When the sale is happening itself, you will consider deferred cash consideration, no? Same here. Here, this 1800 into 10%, and the finance cost also will be considered from 1st Jan 2004 till September 2004. So how many months you have here? Will be having 9 months into 9 divided by 12. That is Jan to September. I'll write here. This 9 months, how you're getting now, you may understand or not, I don't know. So this is from Jan 2004 to September 2000. Okay, this time period, you will compute interest also. So this unwinding cost 1800 into 10% in 9 divided by 20. That is 135. So since it is a negative figure, I'm taking minus. So minus 135. And then what else will be considering for group retained earnings? So apart from that, anything else, we'll just see the adjustment. This is the biggest adjustment here, group retained earnings. If you see here, I have so far we've considered one is a loan note, leave it, that does not have any part in retained earnings. Then we come to the third one. Sales from plastic to subtract throughout the year ended 30th September 2004 had consistently been 300,000 per month. Every month $300,000. There was a intra-group trade. Okay, and plastic made a markup of cost on 25% on all these sales. Okay, happened to sale markup, no need to bother. How much is left over in the inventory we have to see. $600,000 at cost to subtract. It is a cost to subtract means it is a selling price of plastic. Remember that. $600,000 of subtracts inventory at 30th September 2004 had been supplied by plastic in the post-acquisition period. So this 600,000 is a cost to subtract and it is a selling price to plastic. And how much is the selling price given here? 25% markup has been given. So this is a profit on inventory. Is it allowed between intra-group? Profit on 600,000 inventory. Is it allowed?
No, ma'am.
No. So we yes. This unrealized profit. This is remaining about the sale. How much is left over? That only you should take into 25 by 125. It's the minus value. I have to do more. Right? And what else I have here? Let's see. So this is regarding that. And the next one is trade receivable, trade payable. Trade receivable, trade payable will have a role in the assets and current liabilities. It will not affect my retained earnings. Leave it. That's it. So done. So let's see here. It's equal to what? 10,165 is my group retained earnings. Once again, listen only the group retained earnings part. First, you have to take 100% of parents' retained earning, done. Then subsidiaries retained earnings, how much is the share in the post acquisition you have to take, but the 600 worth of asset is already, it is subtracts net current asset. Okay, that increment that you should not do it here. You will add and show in the group consolidated financial statement. So that 600 need to be removed and 80% of that should be taken here. And then unwinding discount on deferred consideration. This is something new for you considering consolidated financial statement. Otherwise, this unwinding myself, I've explained you many times, right from FR1 till now, at least 5-6 times I would have explained it. This unwinding discount is, that is, you didn't make the payment immediately. 1 year after 1 year you're going to make. So on 1st Jan, at the time of acquisition, they will consider a deferred consideration, 1,800 you have to pay. And that 10% into 9 by 12, if we do, it is 135. It's the interest quotient, which will decrease your net profit. So we are decreasing them. And profit included in your inventory, this every time we used to do, that also we are decreasing here. It is 7,165. Okay, this is regarding the working part. It is done. So while coming to the consolidated SOPL and SOFP, shall I start now or in the next class? SOPL and SOFP. Are you people there? Am I asking any answer here?
Yes, sir.
Consolidated SOPL and consolidated SOFP. I'll do it in the next